Well, hello and welcome to the Distinctive Market Watch for March 22nd, 2012. My name's Todd Conklin. I'm with Coldwell Banker Distinctive Properties. I'm going to talk to you a little bit today about Vail, Steamboat Springs, and Sun Valley, Idaho. I'm shooting today from a wonderful Sun Valley chalet, and thank you very much to the Sun Valley office for allowing us to use your listing to film the Market Watch. I was going through some different articles. They were talking about what the market is doing and how do we know what recovery is. And one of the interesting articles that I read was with CNN Money. And the reporter was talking about, of all of the numbers that are out there that we can talk about, he felt that the number we really should be watching is inventory levels. And as we've been reporting for the last several months, week after week, month after month, in comparing to year-over-year comparisons, the inventory levels are continuing to decline in all three of our markets. Now, let's go ahead and start with the Vail market and talk a little bit about what's going on there. In all phases or segments of the market, we are seeing transaction volumes increase. And I'll give you just some quick numbers here. In 2011, in the under $1 million range, there were 8 transactions. During that same period this year, there's been 15. What about the middle, 1 to 3 million? 3 transactions in 2011, 5 this year. And a little unfair, but in the over 3 million, there were none last year, and this year we've had 1, and that was for $6.8 million. So again, still seeing very, very good numbers coming out of Vail. Steamboat as a whole continues to see increases in its transaction volume, again, at a much lower per sale volume. However, the inventory levels are continuing to decrease, which is a very good sign for their market. Now here in Sun Valley, we're not only seeing a decrease in the year-over-year inventory levels, and in this period it's actually an 18% decrease, but we're seeing a substantial decrease in the number of new properties that are coming on the market. And to give you an idea, last year during the same 2-week period, we had, I think it was, 8 or 9 properties that came on the market. And this year we've had a 71% decrease in the number of new properties. Now, the reason this is interesting is because the perception out there is that there are all kinds of bank-owned properties that are coming on the market. And it's just not true. What's coming on the market is coming on the market at a much slower pace than it did last year, and based on the transaction volumes being increased as much as 30-35% in year-over-year comparisons, those properties are being consumed at a higher rate. So these are all great signs and spell health for the markets. In the vacation rental and property management world, we're again continuing to work hard. We are beginning to see people scheduling out further for their trips, meaning now we're really taking a lot of reservations for the July and August time frame, and we actually have already booked many of our Christmas properties for next year. So anyway, we're seeing some strength there, albeit tempered, but overall in the real estate market, people are smiling and feeling a lot more comfortable about what's happening. If you have any questions whatsoever, please give your agent a phone call. And remember, you can get your free neighborhood valuation reports from your favorite Coldwell Banker Distinctive Properties agent. You can search any real estate, both in the resort market of your choice or around the world for that matter, at ColdwellBankerDistinctiveProperties.com. And until next week, we'll see you on the hill.